right, good morning. How are you? Kumateli-vu. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, because trading is risky. It's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is Wayne. It's nice to meet you. I hope you have a nice cup of coffee. Thank you for Traders Accounting many years ago. Named me as a master trader. Master! Master! Master of pips. Anyways, coffee's good. The news is flowing. Banks are doing aight. And we got some risk on. Oh my God, is that what we've been waiting for? Uh-huh. So anyways, the world is wonderful. It's a great morning. So it's nice to have you here in my office. It's about 8 o'clock in the morning, Wall Street time. So we'll have the opportunity to get going. We'll do some technical analysis. We'll look at the stock market. We'll look at gold, oil, Bitcoin, and dollar pairs for sure. We'll open it up if you have some questions. Great. Bring it on, Bubba. It's a very busy day today at FX Bootcamp. You might want to join if you're in the if you're in the swing trading group. We are meeting today at 2 o'clock in the afternoon, New York time, for a stop, look, and correct session. And then the day trading group is meeting at 4 p.m. for our day trading group. Cool. It's a busy day. So awesome. And of course, if you're a day trader, you have access to both meetings. So you got a 2 o'clock and a 4 o'clock. That's why it's super busy. Anywho, you'll find a link to FX Bootcamp in the description below. Remember, it's a whopping $88 a year, and then you can upgrade to one of the live groups, if you so choose. There's also a link to my book, Strategic and Tactical Forex Trading. Have you left a review? Where's the link to the book? Here it is. Have you left a review? It'd be great if you did. I'd appreciate it. I'll bring it up. We'll see if anyone's posted a new one recently. And it goes to a completely different... Does that not work anymore? The tiny URL doesn't work anymore or what? No, it does. All right, cool. Anyways, we'll look at that in a second. Un momento, por favor. There's a link to Quant-in-a-Box. What it does is it goes to a whole bunch of data sources like websites and around the world, like the CFTC's Commitment of Traders report. That's just one of many, 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 many data sources. Pulls all that data in, organizes it, scores them, ranks them, and presents them to you like your macroeconomic economist in a box. There's a link to tradersway.com, a trustworthy foreign exchange broker. There is one. It's called tradersway.com. I recommend them to you. They earn my loyalty and respect. So you need a broker. Why don't you at least give them a try? Open up a demo account and see what happens. Maybe they'll earn your loyalty and respect. Okay. Jim says, Quant-in-a-Box question, euro dollar is above 5 and 20 years seasonal. Well, remember, seasonal just means, is it typically bullish this time of year or bearish, that pair? The fact that it's above to, let's say you're like, well, it's one standard deviation above the 5 year and 20. No. Don't look at it that way. For whatever reason, Jim, and we could speculate to which that is, but for whatever reason, this time of year, that pair is up. Now, from that, Jim, I mean, that's just quantitative analysis. It doesn't tell you, like, why. It doesn't tell you it's what the Fed was doing back 20 years ago this month, or 5 years ago this month, or somewhere in between. So that's just showing you, like, for example, you're going to sail a boat across the Pacific. What is the best time of year to do it based on trade winds? Do they always blow the way you want to go? No. Do they always blow? No. So when do they tend to blow? Because then you're like, oh, well, based on the trade winds, this is the best time of year to sail. Cool. I mean, but that's that. It doesn't tell you, what if it's extra windy? What if it's extra stormy? What day will it, no. But you just have a general idea. Okay. So don't trade it like it's a technical indicator. It's not. It's seasonal. Anyways, 141 rating. That's pretty good. Top reviews. Let's do most recent views. Kyle. Oh, yeah, that Kyle did. That's a couple of weeks ago. Thank you, Kyle. Well explained, direct approach, not just how, but why. Cool. Trading takes work. Otherwise, Forex trader would be rich, right? Wayne teaches fundamentals that lead you to develop a bias. Sweet. Yep. Cool. Now he's profitable. Right on, man. If you're looking for the how, great book. The why, great book. Awesome. Thank you for that. I appreciate it. Amazon customer says, straight to the point, every trader needs. Cool. Right on. Appreciate that. Coolio. Thank you, everybody. Boop, 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 boop. Oh, it's coming down in price. Look at that. Oh, finally, it only took, 16 years? Oh, man, it used to be 80. Now, now you can pick it up for 60. Wow. What a deal. Remember, that money doesn't go to me. I sold the book before I was even done writing it. That belongs to Wiley Publishing. Good morning. Good morning. Good morning. Good morning. So anyways, looking at this is the dollar. That's what we wanted. Pound. Did you see the wage inflation they had? Bank of England. When's the Bank of England meeting? Is it May 11th? Seems like they're really going to have to be aggressive and start jacking up their rates. Does anybody know? I think the Fed is May 3rd. I think the Bank of England is May 11th, but I'm just going off the gray matter. Well, let's just get going. 11 May. That sounds like May 11th, right, Frankie? Cool. Here we go. S&P 500. Once again, we're coming up to the next level. My actual target for April, which goes back to the March low, But even way back in March, we had a bullish target of 42.59. And there's a big psychological stink around 42. And so, and you can see that ends up being R1. So I can adjust this up. Okay. That was just from the day trading group last night. But as you could probably figure out, we're bulls, or I'm bull as I coach the day trading. And that's really nice. That makes me feel good. You can see the nice little roll reversal kicking off the 4-hour 21. Pretty basic stuff. Popped after the day trading group. Reset, pre-London gone. Nice. Great. Or I guess that's Friday and then reset. Yeah, I mean, whatever. Yeah, it's just, that's kind of what it's just supposed to do. It's doing that. We were looking at Nikkei last night at the New York close, and I was explaining how to use this to gauge yen's strength or weakness. Okay, that's interesting. So that's working out just fine. So stock market seems to be up. Bank of America reported earlier this morning, and, not bad. I missed the Goldman Sachs earnings, so I'll have to take a look at that later. That came out probably, a half an hour ago. I was cooking my children breakfast. So anyways, stock market's still generally okay, right? Generally up, generally up, generally up, generally up, generally up. So that's good. So that's my risk on theme, right? Which I covered in my quarterly outlook. And so far, so good. Okay, here's another look, fresh eyeballs on the S&P 500. You can see I clearly have it lined up. This is day trading. So you can see this nice little drop. Let me get my drawing tool. Oh, that's not it. Delete. And then that's too big. And then I want this. Okay, there we go. So you can see, ooh la la, the day before, ooh la la. And now we got our higher high as expected. Cool. Okay. Not too bad, not too shabby. Remember, around the beginning of the month, I did the quarterly outlook over in this area, and it's been pretty good. Been pretty good, pretty okay, pretty good, pretty good. Like I said at the end, I hope you got at least $13 worth of value for the $11 event. I think you did. Okay, taking a look at gold. So this is great. Bulls did what bulls were supposed to do. And now, guess what? Bears are going to do what bears are going to do. So this is the big, how you say, decision moment. Moment of decision. Moment of truth. Okay? A bull would buy here, and I explained this all, yesterday's live stream. And bears, what would a bear do? Well, a bear's going to try to sell a moving average. I probably disagree with that move, but it doesn't matter. I don't have to agree or disagree. The better trade for a bear is this move. So bulls did what they did. And as they enter this zone, maybe they jam. They jam their stop at break even and just walk away. Because technically it's not clear on a 4-hour. Okay, then we go back out to a daily, and it's just a basic trade. You can see. Okay, and we did that in the live stream as well. So what a bull is doing here is essentially this. But it's a daily chart, so on a smaller time frame, there could be a lot of vol on this because not everybody sees it the same. So you could have one of these things before, it breaks out. Okay, it could, or it just goes up from here, and that's fine. So you have a green day today, green day tomorrow, higher high by Friday, and we're all good. Okay, so last night in the day trading group, we had S&P 500 up. We had XAU up. We had USD down. Okay, so what does that mean for Bitcoin? S&P 500 up, that's risk on. Gold, risk on. Dollar down, risk on. Therefore, Bitcoin up. So we'll go take a look at that. Okay. And it went up, 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 down, down. Do you remember this yesterday, guys? The top of this to the top of that. I did this at Forex.Today, yesterday's live stream. And I measured the basic slope, the rise over the run. And I got an average just using a trend line. And then I moved the trend line up and to the right to take out the lag of the moving average. We also discussed like the role reversal. Guys, remember? It was way yesterday. Cool. So that is a standard M2 to M4 strategy. Okay. So if that works, then we should be on our way to $32,155.40-ish. Cool. Okay, Knuckles. Good job, yo. Hey, yo, you know this kid? I said, I didn't, but I know he did. Get ready, because this ain't funny. All right, so y'all, Brent taking a look, still stinking. Going for the moving averages, maybe a little 382. I don't think it's going to make the 382, but whatever. I don't know, whatever. It's just an idea. This is the one where we're talking about divergence, remember? Not on this time frame, though. I believe it was like an hourly. Okay. Cool. So it's happening. What if you're a bull? When can you engage to the upside? Yeah. Yep, for sure. Because you can't have an uptrend until you have higher highs, right? Yeah. Is there a way that we could measure it technically? Yeah, 2155. Now, Johnny's saying on a 5. Okay, yeah, that's aggressive, but that's acceptable. Absolutely, totally acceptable. In particular, around market opens. So somewhere in here, delete this out. This is probably London Open. Sell out. Okay. And now maybe what? Okay. Right now it's still technically down, even on a 5-minute chart. And you could be scalping it to the downside, but you can't be buying it. It's not bullish even on a filthy, no good, stinking 5-minute chart. So you have to be patient enough to at least let the 5-minute chart turn bullish. And now notice that even if you get a little cross up like we did here, they're still below the 200. So, it'd be different if it was doing this, wouldn't it? At some point, wouldn't it be great if the 2155 were above the 200? Remember, the 200 EMA is the fair market value. Isn't that cool? Okay, look how awesome the price action is. 2155 cross down. That's great. Down, 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 up, up. Sell. Okay. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, sell. Down, 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 up, up, down, down, up, 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 up. Okay, somewhere in here you're probably walking away. Why are you walking away? Why are you walking away? Because you lose the price action there. So, down, 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 up, up, sell. Definitely not a buy. And now you're sitting here for the next few hours waiting for the down, 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 down. And if you get a lower low, then you go, and if it comes up somewhere there, you want to look to sell. Or what you're trying to plot out is in the future, blah, 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 blah. You got a moving average somewhere around there. Or blah, 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 somewhere around there. And so either way, all of this is your potential sell zone in the future, but only if you get a lower low. Oh my God, that's so beautiful. Oh, it hurts. Huh? That is so beautiful, it hurts. Huh? Avert your eyes at its beauty. Oh. Gorgeous. Or it turns the other way and goes up. Well, there you go. Sure, nice to have drawn those trend lines days in advance, huh? Yeah, I know, right? And as we get down to 81.50, you should be very, 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 very interested to see if it'll go up. Okay. I'm very interested in what's going to happen in the stock market probably next week if this is a bullish week. There's lots of concern on Wall Street on the institutional side about a potential short squeeze. What does that mean, by the way? What does it mean that that there's some now concern about a short squeeze? Well, you can't have a short squeeze without direction, Emmanuel. There would be no short squeeze if there were no direction. So it's very much directional. There's a couple of issues. Which direction are institutional investors trading and what direction is the market going? So, one of the things Quant-in-a-Box does for all subscribers is it shows you the positioning of institutional traders, not sentiment. It's not a survey. What would you do if... No, this is actually money in the market. Okay? And look at this right now, right here. Okay? There's quite a bit of institutional shortness. The market is short. The institutional investors are short the S&P 500. Remember, they were late. We were shorting way before them because they were buying on the way down. And now all of a sudden they're short, but what's the issue here? The stock market's going up. So at what point do we hit the short stops? Or what point do they capitulate and take the loss? Remember, I was triple leveraged short, but I got out 5 or 6 weeks ago, remember? I got out of my short because I'm like, hey, April's going to go up. Do you guys remember this? At the beginning of March, I said I'm still short. And then by the middle of March, I'm like, I got to take my hedge off because I believe in April we're going to have a stock market rally. I don't want to be hedged if I know it's going to rally. So I'm going to unhedge and let it rally because I have all my cash positions. Do you guys remember all this? Like, I'm not making it up. We talk about it every day. Well, other institutional investors apparently haven't adjusted. Oh, Burns says, how do you distinguish retail from institutional money? Okay, that's easy. Let me do that. Okay. So when you look at the COT data, okay, you have the total number of contracts, total contracts, right? So you have the total contracts, and then you have all bona fide hedgers. So, right? And bona fide hedgers have to report to the government. Okay, and that they have to report to the government that they're hedgers, and then they have to report to the government their positions on a weekly basis, guys. Okay, so there's a number here. Okay, there's the total number minus the total number of hedgers, and then the government requires large institutional investors. They're required by law to report their positions, money in the market. So we have the institutional, institutional. Okay, so there's that number. Okay, so guess what? You have the total number minus the hedgers minus institutional positions, and guess what? Does this equal 0? Burned? No. So there's this leftover gobbledygoo. There's a number, okay? Hedgers Total minus hedgers minus institutional is a number. They're not hedgers. They're not large institutional investors. It's just leftover gobbledygoo. What's the leftover gobbledygoo? Well, not institutional investors and not hedgers. So it's retail. They're small, speculative, because institutional is speculative. They're in the market to make money. Hedgers are commercials, which are not in the market to make money. They're in the market to hedge their risk. So there's this leftover. There's small speculators, which we call retail. Okay? That's how you derive that number when I talk about retail positions. Okay? Okay? Sure know what I'm talking about? So anyways, that's what I mean by we're at a point where some investors, okay, they're still short. Okay. Yeah. Oh, Brent said, thank you. Thanks. It's clear. Yeah. And that's where, like, when I get the retail sentiment, that's how you derive this information. Okay. Okay. Cool. But anyways, going back to S&P 500, more astute investors realized a long time ago S&P 500 was a buy. Okay? But that doesn't mean everybody makes decisions that way. Yes, Jim. In fact, it does say anyways, yeah, typically it says. So retail is short the S&P 500. Okay? But institutional is short the S&P 500. I'm long the S&P 500, and I have been for quite some time. Okay. And remember, in March when it was falling, I said, get ready, get ready, get ready, get ready, get ready. How many people can confirm that? Get ready. Get ready. Right around April, right around April, right around April. Okay. Yeah. Like every day, like even months in advance, like, well, I'm going to be long in April, but I'm going to stay, right? So anyways, you can see where I'm getting this data. 20 years of research indicate that get ready kind of stuff. Okay. And of course, right now we're projecting 42 and 42.80 and some change, right? But that's just if this rate of change continues. Okay. Now, here's something that you might not have seen yet, and it's coming. Okay. Most recently, this went bullish April 1st, March 31st. You see this? March 31st. Even Quant-in-a-Box flipped. March 31st. Oh, that's Brent. Boop. So we'll get back to there. Where's the S&P? S&P 500. All right, here we go. So Quant-in-a-Box. right in this window here. Oh, I double clicked. Right in this window here, Quant-in-a-Box went bullish on the S&P 500. Now, what I was showing you here is it's back testing and scoring its own accuracy. See? It's okay. Buy, sell, 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 buy. So I can tell you exactly when it flipped the other way. And it flipped right there. Boom. Cool! Okay. Cool. Nice, right? I know, right? Huh? Right? Come on now. But Wayne, you just said seasonality is just that, seasonal, correct? Well, yes and no, Bern. Like, I don't follow anybody. And typically you would follow institutional more than you'd follow retail, right? But what you have to come to grips with, and this is interesting, really, is that institutional investors, let's say, because, the nicknames are, retail's dumb money and institutional smart money. But what I've learned over 20 years of doing this, institutional investors are very often wrong. They're better than retail, but look, some of them are not that great. So there are periods in which there's a high probability of institutional investors being wrong. And that's actually where we do quite well, because there's an inefficiency in the market. Now, it's also a little bit dangerous, right? So, yeah. So you have to remember, Bernd, it's just information, but we're somewhere in between retail and institutional. So a lot of institutional investors cannot adjust very quickly. Their portfolios are too big and too complicated, and they're just a bit slow. Okay? And then we have to adjust, because then we watch the pricing in of certain assets based on, institutional assumptions of Fed policy and all that kind of stuff. But I'm someone who thinks about Forex quarterly. Bernd says, are we the smarter money? No, we're just somewhere in between. We're just somewhere in between, where most of the time we're following institutional, but we're more flexible at the peaks and the troughs. Now, Richard says, I think the markets are wrong pricing in a cut later this year. Yes, that would be an example. Cuts are being priced in, and right, that the Fed will cut this year, but Jerome Powell has said they're not going to cut this year. So we don't know who's right or wrong, because maybe the Fed does cut this year, and then all those bets will pay off. But that's not factual yet, so we don't know. So you have to make a decision. Okay, but if I'm changing my investment, not philosophy, but if I'm adjusting my investment strategy in the stock market based on seasonality, and I'm calling things out 3, 4, 5, 6 weeks in advance, then there is something to seasonality. Now, is it always right? No, of course not. But let's just say, I don't know what the number is, but let's just say if you thought there was an 80% chance the stock market was going to rally in the second quarter, I'm just making this up, but let's just say you've done research. I'm not talking about guessing. You just knew over the last 20 years, 80% of the time the market was either very bullish or somewhat bullish in the second quarter. And you were short. Well, is it going to be bullish this year? You don't know that. But you're short and you're like, dude, like, maybe I should temper my enthusiasm for being a bear. You see, like, wouldn't that be at least helpful for risk management? Jim says, I've been through the basic Quant-in-a-Box training. Is there advanced training? Well, you could go, well, I mean, you've joined FX Bootcamp, right? So go through the 88 hours of training. Because, and here's the other thing. Here's the other thing, Jim. Quant-in-a-Box is complicated, right? It's got a lot of stuff going on, right? But don't overdo it. Don't overthink things. I've told people in the past, if you don't know how to do fundamental analysis, flip a coin. So you don't just buy the S&P 500, okay? If Quant-in-a-Box says buy, and I am going to change that in the next release. So it's never going to say buy or sell again, because it's just not the right way of thinking. Okay? So you flip a coin, or in this case, Quant-in-a-Box says bullish. Great. So now what? Now you only buy dips. You still need technical analysis to figure out what a dip is. Right? So, but the thing is, you're done the other 90% of the work. Okay? Because there's two decisions really going on. You're only buying dips and you're never selling. Those are the two things. Now, which means if the market falls, and it will fall even in a period where Quant-in-a-Box might say bullish, because it's just quantitative analysis. It's not a genie in a bottle. Okay? It's just like, dude, you add this to that and it spits out a number. But the thing is, if it falls, something is likely unusual. Something happening is unusual. It doesn't necessarily make economic sense. The market is behaving based on something other than economics, and that happens a lot. Behavioral finance, greed, fear, all of this stuff. But what you're deciding is, if it doesn't make economic sense, you don't want to trade it, which is perfectly fine, right? So anyway, so if it's falling, and you've been set as a bull, well, guess what? You don't lose money because you don't have any trades to do. You understand? Okay. So whether you flip a coin and get to a bull and not sell in falling markets and not buy in falling markets, right? Because remember also, you can't buy a lower low. You cannot buy a lower low. Think of these rules of engagement. It's falling. You're not a bear, so you're not selling. You're a bull, so you buy higher lows. But if it's making lower lows, there's nothing for you to do. This is called discipline. It also tells you that there's strategy. Oh, but Wayne, if I just sell it, I would be making money on the way down. Yeah, well, you can't. Okay? So you might as well be disciplined and have a strategy. Okay? Nice. Now, the other thing that you're indirectly learning is how to plan for the future. And so you might get to something like this, like when you go to the dashboard, okay, and I'm looking at this. Remember how I break this down. Remember, it's mathematics. It's actually calculus. And you got your grid. Okay? Okay? And everything over here was expected to go up. And everything here was expected to go down. So maybe those are the dips and rallies. Maybe those are tomorrow's trades. Maybe these pairs are your next trades because they're the ones out of position. What typically happens is an amateur trader logs in and they're like, this has been up all day. I guess I'll buy it too. Well, it's been up all day. Where have you been? Well, I've been sleeping, right? Been playing Fortnite all night and I slept in. So now I'm going to buy all this after it's already gone up. Well, guess what? Somebody's going to start taking profit and you're going to help them, right? So these are tomorrow's trades. And that's kind of like, again, Quant-in-a-Box is helping you think about the future, not the past, right? Okay, anyways. So what shall we do with the drunken sailor? What shall we do with the drunken sailor? Early in the morning. Hang on. I gotta do something. Hang on, Bubba. Actually, I need to do it again. That's not right. All right. Now where did it go? Gee whiz, criminy, what the hell, son of a... Where did it go? My snipping tool. Oh, I found it. Copy snipping. Hang on, everybody. Papa's working. I got to send an email to the development team. Ooh, I almost spilled my coffee. Put it up there, Wayne. I got to send something to the developers. Oh, wrong email. Early in the morning. See, that wasn't too bad. Okay, I'm back and I got a bigger gat. Okay, anywho. Yeah. The thing about strategy, and I do cover this in my book from 1,000,000 years ago. There are basic rules of engagement, and then you can measure sort of qualitatively the strength of the decision. Not the decision, but of the trend. Like you start with the market. What are the markets doing? Is the market bullish, or is the market bearish, or is the market neutral? So, You can have a million different ways to get to that answer. I have some simple rules to make that decision. But once I've made the decision, because I base it on either long-term fundamental analysis or long-term technical analysis. Okay? So, for example, let me help you understand. I look at this chart and I'm a bull. Done. Strategically, I am done. I don't have to look at it anymore. I don't have to think about it anymore. Okay? So I think this comes from my experience as a venture capitalist. Because I do remember some of the very, very, very early days of being a Forex trader. I played around with the idea of what are all these different time frames, and I started asking what I think all amateurs ask, which time frame is best. And I played around with that for a while, and then I realized, well, they're all correct. So how to use the different time frames? What is the use? And I realized it's fractal geometry, and I started using the different time frames for different purposes. Okay? And one of my first ideas came from, again, my very, very early days as trading as a Forex trader. My wife and my father knew I was trading Forex. This is even before I even quit my job. Okay, so I'm still a VC. I'm still going to the office every day, all that kind of stuff. But day and night, I'm doing Forex. And people would ask me, like, so how are the Forex markets going? And I found it very difficult to answer the question. Because I just spent, 7 hours staring at a 5-minute chart. And I didn't know how to answer the question because they're asking me a broad question. So how are the markets going? Well, they were up for 3 hours, then they were down for an hour and a half, then they were up for another 2.5 hours, and then they came down for an hour, and then they went sideways for 3 hours, and then this news came out, and then it skyrocketed up for about 45 minutes, and then totally collapsed for another 2.5 hours. And then I'm like, gee, how do you answer that question? I don't know how they were. It was wild. And then I realized they don't need that level of detail, do they? They're not asking me about a 5-minute chart. They want to know up or down. And I thought, that's the smartest question ever. Oh my God, why didn't I think about that? See, there was a period of time where I didn't realize the most basic question. Are the markets up or are the markets down? And I'm like, I don't know. They'll be down for 2 hours and then they'll be kind of partially up for about that same period. And then well, I don't know. We'll see if it breaks to 200, right? Like I couldn't answer that. And I thought, that's a very astute question. So how do I answer it? Are the markets up? Are the markets down? Or are the markets neutral? And then I started using technical indicators to help me identify, are the markets up, are the markets down, and the markets sideways. Okay, so now the technical indicators were no longer telling me what to trade. I was using the technical indicators to measure market conditions. And even just mentally, it's a different use. I mean, look, a lot of new traders, they're waiting for MACD to tell them what to do. They're waiting for RSI to tell them to buy or sell. And all of a sudden, I'm using a moving average to measure, like I'm using it now as a tool. And then I thought, well, obviously I don't want to do that on a 5-minute chart because that's just price action. That's me scalping. So I played around with multiple time, weekly, daily, 4 hour, 1 hour, even 2 hours. I used to do 2-hour charts with 3-minute charts. Did you know that? I used to use 2-hour charts with 2 and 3-minute charts. So anyway, so I got to that point where I settled down somewhere between a 4-hour and a daily. Daily was a bit slow. I could move faster than a daily. So I got to around 4-hour chart and I would answer the question. Is the market bullish or is the market bearish? Seems simple enough, and it is simple. And then I'm done. So the market's bullish for gold. Now I can drop into a small time frame. We'll go from daily to 15. And in this case, I would be buying dips. When this time frame became bullish, I had permission to engage bullish trades. You see? And I stopped I stopped worrying about bearishness. I stopped worrying about, should I sell the 200 and should I, no, shh. I quiet my mind. And I buy dips or I don't buy dips. And I noticed, market opens are important, and there are cycles, and market closes are important, and even market peaks, and all that. So it was simply now a timing issue of when I was going to buy. Okay. You see how I got there? And to me, that's much more important of me just telling you, do this. Step 1, do this. Step 2, do that. It's too constricting. It's too mechanical. I'd rather you understand how I got to where we are now. Okay. So I'd probably be here looking for opportunities for the up. I look at it and I'm like, not now. Cool. Oh, I guess I'm not supposed to do that. Wrong bouton. Wrong bouton. Yeah. Well, let's bring it back. Bring it back to my. So anyways, that's how we do it. Yeah, the start is tough. Yeah, for sure. Oh, Bitcoin, everything's, yep. Beautiful move on nat gas, huh? Just great. Trader's Way pays you a nice, wait, no, you can't get in on that. Someone else is getting paid a nice swap. There are some boot campers that are in that earning swap on nat gas. It's kind of cool. So I guess that's just where I am. I think I'm out of energy. It's been a long morning, huh? So remember, this is a big day. Tuesdays are big days at FX Bootcamp. So all day traders and all swing traders are invited to the Stop, Look, and Correct session at 2 p.m. New York time. And then all day traders are going to meet with me at 4 p.m. for the day trading group. Now, if you can only attend one, attend the stop, look, and correct session. And then later, if you want, you can watch my video. You don't have to attend both live. That's tough. I get it. Don't worry about it. You're not going to hurt my feelings. But I might see you at 4 p.m., so I'll see you over there. For people who are watching, you should know most people that watch this video are members of FX Bootcamp. Maybe you should come check it out. Been running it for 20 years. There might be something in there for you. Peace on earth. May the pips be with you. May your profits be above average. And I will see you later. And remember, if you join FX Bootcamp, you'll join for the training videos and you'll stay for the community. That's the secret sauce. The people at FX Bootcamp are amazing people.